Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar bears are not holding back as the current decline crushes the support overnight at 76.30 and now targets the bottom of the range around 76. That being said, we have slipped under the 76 handle this morning and now looking towards the target is 75.85, which has been the low so far. Presently, I do expect to see the market eventually turn around due to the fact that we are in an oversold territory from the RSI. That being said, the market still seems to be under pressure as the US dollar index surges overnight. The Australian dollar has plummeted to a 4-month low after shedding 3 days of weakness and over 200 points. Towards the region of the target that I'm holding, 75 cents, I do expect to see a bullish correction from there. So I'm not overly bearish at these levels due to the oversold condition. But that being said, as I mentioned, 85 to 45 could be seen in the next 12 to 24 hours of trading, with the resistance seen at 76.45. Well, as you can see, the dollar index has pushed the euro lower and now towards this level, or crucial level, of 121.80. We're trading at 86 at the moment. Now, break beneath 80 will give further exposure to the downside and bring in a target immediate to 121.30 and expect to see a lot of stops being triggered also. The dollar overnight surged through the downtrend at 90.40 and with the broad downtrend taken out now, did score a high of 90.99 overnight before settling at 90.93. Now, as some of you know, the dollar index is weighted against a basket of 6 major currencies, with the euro weighted at 57.6. So, as I mentioned, let's see if the market can take out this level of 121.80. Here's the measured move from the double top reversal and could expose the region of 118. Well, dollar yen finally took out the challenge of 107.70 yesterday, and from the break, escalates higher towards the immediate target of 108.55 and now with view towards 109.15 as a potential move. Although we are trending, and also the other two indicators, which are the MACD and also the stochastic, is bullish, I am a little bit cautious. The fact is that profit taking may be seen ahead as we approach the 109 region. Therefore, if you're holding a long position, I do expect to see, as I say, some caution there because of the extreme high of the RSI. So we could see a snap turnaround very soon. Support of the day seen at 108.35. Well, this losing streak for the pound has continued overnight, and as you can see, the market is now moving closer to the objective of 138 as it challenges the low 139. What triggered the market was the Bank of England Governor's dovish comments from last week and trying to push away any near-term potential rate hike. I believe is still viewed in May. The British pound has tumbled yet again for the 5th consecutive day and now looks towards the target of 139.05, and this could actually see further exposure towards the region of 138. So resistance on the day is quite high up, around 140 to figure 20. Concerning factor that the gold overnight tumbled very heavily, nearly $14, and this last 3 days of weakness since we've fallen away from the highs of 1,315.60 is now questioning whether the demand will actually come back to the market. Overnight, the geopolitical tension has even reduced further as China and the US trade wars slowly come to some peace talks, along with the North Korea as well, who said last week it would suspend its nuclear and missile tests ahead of a planned summit with South Korea and the United States. This comes as US President Donald Trump said last week that he hoped a summit with North Korean leader would be successful. Easing US-China tensions also lessened demand for safe haven gold, after the US Treasury Secretary Stephen Mnuchin said on Saturday last weekend he might travel to China to discuss trade-related issues. A break beneath 1,318 would give further scope to the downside, and do take note stops will be triggered towards the bullish foundation that now remains around 1,300. Rounding off with oil, the market is still at present questioning whether they continue to rally after recent tweets from Donald Trump. He said not so long ago that has accused OPEC last Friday of artificially boosted oil prices. His tweet said, "Looks like OPEC is at it again, with record amounts of oil all over the place, including the fully loaded ships at sea. Oil prices are artificially high, no good, and will not be accepted." So let's see if that can turn the market slightly to a bearish case. And also, the market should take a look at the General Electric Baker Hughes energy report after its disclosure of its US drillers added 5 oil rigs in the week of April 20th, bringing the total count to 820. This is now the highest number recorded since March 2015, underscoring worries about rising US output. So I think the market is a seller at these levels, and also from a technical point there is some divergence, so we should see a pullback to at least $66 a barrel. So that wraps up today. Thank you very much for joining me, and I hope you enjoy the rest of the day that's ahead.